Are we about to see the next leg down for cryptocurrency? How will regulation following the FTX crash potentially impact the market? And what will it take for Bitcoin to see a macro reversal? Let's go ahead, dive into the charts and find out. Okay, MegaWhale team, welcome back to the channel, guys. Thank you for tuning in for today's video. Hope you're all having a fantastic day as always. We're going to go ahead and talk about those key points we discussed at the start of the video, which was regulation and how it's going to impact cryptocurrency, what is coming for that, Bitcoin's price reversals, and obviously the short-term price action. Before we get started, smash the like button, comment down below, and subscribe to the channel for daily Bitcoin analysis and technical updates. Also, head down to a pinned comment and click the link to join our Telegram channel. Should be the second link down below. You get access to all of our videos over here, polls, updates, charts, analysis, information, and really so much more. And of course, if you're interested in our VIP channel, you can go ahead and find out more about the VIP channel by clicking these links to find our membership details and obviously our monthly results since February 2021. Let's go ahead and dive in, and we'll start with our market data. So as we've seen in the market in the last 24 hours, we haven't had a lot of price action. Once again, we've seen a little bit of a drop down, around a percent and a half move back downwards, obviously negative 18.63 for the month at the moment. Volatility is more or less the same, and obviously liquidations are very low for 24 hours, indicating again, not a lot of trading is going on, not a lot of volume in the market, and not a lot of price action. And that is very telling, and it kind of goes hand in hand with the volatility, as although the volatility over a 30-day period is high, for the last few days, we can kind of see on the chart over here, if we zoom in, it is kind of plateaued a little. I might zoom in a lot over here. You can see it's very much just plateaued. So although the overall 30-day volatility is high, volatility for the last week in cryptocurrency has actually been very low in terms of day-to-day change. So right now there isn't much volatility. As we know, low volatility equals not a lot of price action in terms of daily swings. If we take a look at Bitcoin over here, we can see from yesterday's video, we said there really is two options of Bitcoin here. Option number one is we break through a 17,000 high and we continue upwards to these levels over here. Or option number two is we lose the 16,800 level again and we end up going down to our green lines to our targets. So we actually did lose that 16,800 level. We crashed back down. We reached our target one of 16,381, which is around 16,400. Since then we have bounced, and it looks like we're rejecting from this 50 SMA, potentially going to retest and reject from this zone again. And obviously these lower targets are still very much valid. Again, a move upwards on the short term would only occur once this level is reclaimed. If we do push above 17,000 on a smaller time frame, we can then expect a continue upwards to around 17,300, potentially even higher. Until then, it is looking much more bearish now, and we are expecting that continuation towards these green lines on the smaller time frame. So if you're in shorts now, great. If you're looking for shorts now, great. Right now is not the time to be taking longs. It's definitely the time to be looking for shorts in the market. Where can you take shorts on altcoins? Where can you take shorts on Bitcoin? Look for your possibilities, look for your entries, and play with the trend. Remember, trading with the trend is the key thing. When you're trading, first step is identify the trend, whether it be a short-term or macro, depending on time frame you're trading on. Step number two is look for points of confluence. So look for points at which you could find entries and demands or resistance zones. Okay, and then point number three is look for your technical confirmations to assess the actual trend on the smaller time frame to get the best possible entries as you can. Moving on from here, guys, I did want to discuss the broader market first. So obviously DXY is very much in the same spot yesterday, but it is holding this spot quite well. We do have this support line around 106.6. We are fluctuating again around that level, which again is indicating as possible support. What I do like to see over here is this sideways consolidation. It is nice to see some sort of sideways consolidation after such volatility, of course. We do have this downward trending resistance line developing here on the DXY, and this is very indicative of a reversal pattern. We like to see these lower lows followed obviously downwards over here, obviously followed by these lower highs. We generally have a descending channel or descending wedge formation, and these formations are of course reversal patterns. So downwards consolidations that do expect a break to the downside and continuation. So what we're seeing on the DXY here is a potential breakout coming to the upside. We can push back up, potentially taking us to around 108. I'd be looking for a target around 107.5. If we do push any higher, around 108, and best case scenario 109. As we already know, guys, if DXY continues upwards, Bitcoin will continue downwards, and thus that kind of supports that short-term direction we're talking about, the potential rejection around this level and a continuation down into these lower green levels if that occurs. Total cryptocurrency market cap is more or less looking exactly the same. We do have a rejection at that point still. Therefore, this is very, very, very strong resistance. This is incredibly strong resistance. As long as we remain above this, the macro situation for crypto right now is not going to be ideal. It's definitely still pointing towards that downside still until we can reclaim this level. Okay, so short term it can fluctuate between looking okay, looking bad, but we're talking about a macro, we're talking about a larger time frame. We're definitely still looking bad over here. Okay, Dow Jones, we did get rejected from the 34,000 level. As you can see, 34,000 has been a major area of resistance and support, dating all the way back. We're talking about October 2021, even prior. We have not been able to break through it again over here. You can see a pretty strong rejection at that point. We can expect that price to come down as the Dow Jones, the DXY rallies upwards. And of course, breaking through this level will be the indication for a move up to 35,500. Which will be retesting that bear market resistance, which will enable a new uptrend to develop. Until then, looking pretty bearish here, guys. We're looking like we're starting to lose these small time moving averages on the daily. We have obviously got rejected pretty hard over here. We can expect a move to these local highs again, which is around 33,000, potentially down to around 32,000, or even just downward sloping diagonal if the trend fully flips. S&P 500, exactly the same thing, guys. It looks like we have extended to the top of this move over here, rejecting from 4,000 total, which is a psychological resistance, obviously on this chart over here. Failure to break above here will not enable us to retest this downward trending resistance, which is our main resistance on the chart here. We do need a break to actually break out of its downtrend. Until then, we are still in a downward consolidation. The overall market is still looking bearish, and we have to expect the price can come back down. Again, DXY will be very telling. Bonds starting to move upwards a little bit. Bond yields on the 2 days of 2 year as well, starting to move upwards a little bit. Nothing too significant there. Bitcoin dominance pushing through a 40% level again. Let's go ahead and talk about one thing, guys, and this is regulation in cryptocurrency. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. There's an article that was posted today that I wanted to discuss, and this is global banks partnered with New York Fed for 12-week digital currency pilot. The digital dollar, digital prices, watch a guru. I can find them on Twitter. Shout out to them. Now, here's the thing. There's a lot of talk about central bank digital currencies, what they are, what they mean, what people think about them. And I want everyone to be very aware. The central bank digital currency is going to be marketed towards the public in a way that is not anti-crypto, but is kind of the solution to the lack of regulation and the problems cryptocurrency face. And this is why we're seeing this article now with perfect timing. Not only a few days after the FTX crash. Again, FTX crash, the actual crash has nothing to do with cryptocurrency. It has everything to do with poor investment decisions, over leveraging their position, having liquidity problems, and unethical behavior surrounding utilizing customers' funds to acquire assets. Okay, they were doing nothing different to what a traditional bank does. When you give your bank your money, they take 100% of that money, They give you a credit, all right, that's in your credit bank, your bank, they give you credit for that money. They take that money, they invest it elsewhere, okay? They re-leverage, repackage it, and send it off. They don't even know how much risk is in the market, okay? That's exactly what FTX was doing. The problem with FTX, of course, they got called out, their token crashed, their liquidity dried up, okay? There was so much more to it, but essentially there was a bank run on FTX. They couldn't meet the customers' withdrawal demands. They didn't have liquidity or the assets to actually liquidate to do so, and therefore they went bankrupt, okay? But this isn't a problem with cryptocurrency. Cryptocurrency itself didn't cause this, but to the unknowing, it did, okay? If you go ahead and read this. Additionally, some of the large banks in the world are taking part in this experiment. This experiment is basically trial runs of central bank digital currencies. Of course, if you're in Australia, you know Australia has been planning to do a pilot run for quite some time now. At a time, this is the key thing, at a time where consumer confidence for blockchain transactions is at a low. This news highlights the fact there are still real-world use cases for this technology. So what this statement is saying cryptocurrency is not cutting the cheese, low confidence in cryptocurrency, it's not working as expected, and therefore we've got this new shiny central bank digital currency that's going to come in and save cryptocurrency, shave blockchain technology, and it's going to be the new best thing. In reality, guys, it's not the case. Now, here's the problem. Regulation is coming for cryptocurrency, and it is a necessity. And if we go ahead and look at the chart, I'm going to kind of talk about regulation. This is going to be pretty speculative, so hang on for a second. But I'm going to talk about regulation in this sense. For the next bull run to occur, or by the next time the bull run does occur, regulation will be implemented in crypto, okay? And regulation is a blessing and a curse, right? It's got good things and it's got bad things. The good things is, with regulations, big money is able to come into the space with more security, okay? Because at the end of the day, regulation is to protect big money, it's not to protect retail. If they cared about retail money, they would have implemented regulations much longer ago. It would have been already done, because retail had been getting slaughtered by scams and exchange manipulation for a long time. But this time, big money got burned by FTX, and now regulations coming in. So they only care about protecting big money. Regulation for big money is protection. Regulation for retail is restriction, okay? Very, very important to understand that. So when regulation comes in, we'll have, insurance funds, we'll have pension funds, we'll have, hedge funds and other companies start to invest, banks start to invest in cryptocurrency, and yes, it will prop the price up. But until then, I do believe cryptocurrency is going to see a bit of a downturn, and that is expected as our price predictions do expect potentially lower for crypto. So the benefit of regulation is that in the long run, it could potentially result in crypto, particularly Bitcoin, actually gaining some price action, go up. The negative is with regulation and central bank digital currencies particularly, they could restrict or limit your purchasing power when it comes to acquiring certain cryptocurrency assets. Not so much Bitcoin or Ethereum or these large ones or regulated ones by the government, but these smaller altcoins that are kind of just like pump and dumps or whatever. They're going to limit your ability to buy these, or most likely they will have the possibility or the ability to do so. And in a free market, everyone should have the right to be able to invest what they want to invest in, what they want to invest, and that is kind of a breach on our freedoms when it comes to investing. Okay, so essentially we're just having the government tell us what we can and can't buy. So that's something to keep in mind, guys. Regulation is coming to crypto. I don't really know how it's going to impact the market. I don't think anyone really does. My speculation is it will have positive and negative impacts. Positive impacts, it will be good for the Bitcoin, it will be good for the overall crypto market in the long run. Negative impacts, it might impinge on the freedoms for retail investors in investing in what they want to invest in, and obviously the whole can of worms of central bank digital currency. If you want to hear my overall opinions on central bank digital currencies, let me know. I might do a video on it, but I'm not going to get into too much. So let's go back to the price action. We've talked about the short term now. We've talked about what we think is going to happen in the broader market, what we think is going to happen in the short term, what you should be doing right now, how you should be positioning yourself. Let's talk about the larger time frame. Should you buy Bitcoin now? Where will Bitcoin go? What do we think is going to happen? And where could it potentially bottom? So should you buy Bitcoin now? Very simple. I don't think now's the best time to buy Bitcoin if you're looking for the best possible entry. If you're looking to buy Bitcoin for a very long time frame, we've got a large time horizon, talking about a year, 2, 3 years. I think anywhere over here is a great time to accumulate. I think you should start to accumulate some Bitcoin here, a small amount of Bitcoin here, but your big buys should not be placed here. You're waiting for points of massive confluence in the chart to purchase your big buys. And where are those points of confluence? Well, massive supports. So the question is, where is the next major support on Bitcoin? Very, very simple thing we can do, guys. Bring up the VRPV. Obviously, you've been watching our channel for a bit, guys. You know how much we like the VRPV. It's an incredibly useful tool. I don't know why it didn't come up. The visible range volume profile. There it is. Okay, we can change that to 200, and we can see where these support zones are. So obviously on the chart over here, we are starting to develop, as you can see, a nice peak in the VRPV over here, indicating we are actually developing a new support level, okay? A new support level sitting around 16,500, okay? Which is very, very interesting. As we said before, we can develop supports. They don't just randomly pop up, in the sense that at some point a support has to be created. So all these historical supports at one point were not support on the chart, and they were created, and at that point the people didn't expect it to be support, but support does pop up out of nowhere. And support is generally more likely to be developed in areas of lower historical trading volume. So this area here was a very low historical trading volume range. We didn't have a lot of historical trading volume. And what the VRPV represents, it represents horizontal historical trading volume at a specific price point, okay? So it says at this price range between X and X, the historical trading volume over this historical horizontal range was this amount. So as we see these larger peaks, we know at this price range over a horizontal level, we had a massive historical volume, okay, whether it be selling or buying. Generally with more volume, we have tighter price action, or we have support, or we have resistance, okay, depending on what side of the price action you're on. For example, 19,000 over here, very, very huge peak, incredibly strong resistance. A lot of trading volume over here, we have a very strong resistance here. Moving downwards, we can see a massive gap that starts to prop up around 12,000 again. Therefore, at that 12,000, the 13,000, you know, to 11,000 level, or even 10,000 if you want to stretch it, is where we run into major support again. So on the chart, the next logical area to look for big purchases are either signs of reversal above this level again, or if we come into this zone, okay? So that is what we're looking for. For macro reversals is a little harder to say. Obviously, if we take a look at the log scale, we can see Bitcoin's down around 75, 76%. Usually bear markets here around negative 83%. But again, we're not always going to see that massive drawdown, and every cycle the drawdown percentages will become slightly smaller. Seeing an 85% drop from a 3 trillion market cap compared to seeing an 85% drop from a 900 billion market cap, the amount of money that displaced is significantly larger. So generally, even if the percentage isn't larger, the bear market can still be larger and more aggressive in terms of monetary displacement. So we have to keep that in mind too. We can't expect going forward every bear market is going to do an 85% drawdown. It's just not logical, okay? So that is it for today's video, guys. I'm going to leave it there. I hope you enjoyed today's video, and we'll catch you in tomorrow's one. Cheers.